What's up traders, Tom here with another video. Today we'll be discussing the increase in volatility in the stock market right now, our thoughts on the S&P 500 and Nasdaq and where this possible dip might end up, the second wave, and also the rise of the mass speculating retail day traders. This might end badly for them. Stay tuned. So to begin this video, I just want to talk about we are currently seeing some increased volatility in the stock markets. Obviously, the Dow futures are now down about 600 points. And throughout this video, we'll discuss some of the reasons why I think that's happening. But we'll also be looking at our technical analysis thoughts. And on top of that, we'll also look at this idea that there's so much speculation out there. So there is a lot of speculation, and we'll look at some of the culprits and what their mentality is going to be so we can potentially trade around their ideas. So for anyone that's been following our channel for a little while, we've mentioned that one of the catalysts for a second kind of pullback was going to be the idea of the second US virus wave. And it looks like that's emerging as cases are now topping 2 million. In terms of where the cases are increasing, we've got Texas, we've got Florida, and we've got California. And this is off the back of course, the protests, but also a lot of these sections are opening back up. And of course, it's been a little bit of time now, so that's creating this spread. Is the spread going to be that bad? Time will tell, we don't know. I would think it's going to be spotty. Certain states are going to have it, of course, a lot worse than others. But this is a catalyst that the stock market will use to sell off these highs. And remember, I said Wall Street will want to get more volume in. Do I still think the bull case is probably in the market? Yes, I think the Fed have pretty much said they will support it no matter what. And we'll talk about that more in this current video. So what's happening in terms of yesterday's closes? Well, more of the same. Tech stocks have become the new defensive stock. We have all-time highs on things like Microsoft, on Apple. We've got some extreme moves there with money going into them. We spoke about how the Swiss National Bank has been purchasing those stocks along with, of course, retail traders and everybody else. The valuations are incredibly high on those, but they are companies that don't seem to have cash flow problems as much during this crisis. Companies like JP Morgan and others and the banks are getting smashed. Wells Fargo got about 9%. It's going to have more today. And that just shows you that people are really concerned about this idea of low interest rates over a long period of time. Remember, banks do not like low interest rates for long periods of time. We mentioned that. What happened in Europe destroyed the banks, and what happens if you go negative interest rates, which of course the Fed don't want to, it will hurt the banks. So there are other sectors that you probably want to look at, but for now, those banks are definitely getting the money getting taken out of them. We've got Elon Musk tweeting lol at the stock market and referring to the stock market. He called them stonks, which has become a very key or liked term amongst usually younger people from what I've seen. Basically, it's picking fun at the fact that the stock market is kind of like gambling right now and it has massive moves in it. So people call them the stonks, which is fair enough, especially with what we're seeing. We've got the Fed coming out that basically said the exact same thing they've always been saying, which is they are vowing to support the US economy. They are saying the words constantly, long road to US recovery after the dire 2020. We're pretty much seeing a 6.5% shrink, of course. In terms of the economy, we are talking about an unemployment rate of 9.3% is what they see at the year's end. And they are basically saying we are going to leave interest rates incredibly low for a long period of time. This will mean that people need to consider places to put their money. And one of those things is going to be the stock market. It's why we're seeing that big rally back up. It's the expectation of where else are we going to put anything? Are we going to put it in bonds for the long term? Are we going to put it in cash for the long term? Are we going to put it in real estate for the long term, businesses for the long term, or the stock market for the long term? This is a decision that investors are having to make. We have a 5% GDP expectation of rebound next year. That's not going to actually get us back to even what we've lost technically, supposedly this year. So next year is not going to bring it back. And it looks like it is going to be a bit of a time ahead, and that we will constantly be seeing this QE policy in the stock market for the foreseeable future. Jobless claims will be coming out. I'll see if I can put them in the back of this video. It's expected that 1.55 million will be filing. If you do not have an economic calendar, make sure you get one. Here is forexfactory.com. You can see here the expectations and what it really is. In general, they have been relatively correct, except for, of course, the first ones in terms of their expectation and the real filings. If the result is much worse tonight, expect the market to go down even more. So I will try to re-record a section at the back end of this video for everybody. I want to talk about speculation a little bit. I want to talk about the retail investors and what they're doing and what the market's taking advantage of. The market's made up of course, big investors, algorithms, retail traders, pretty much in general. We have this massive speculation ramping coming from the retail herd. Now, this is literally the Google Trends searches for day trading and call options over the last couple of decades. So this means the percentage of people that are searching for them. So check out this. For a long time, not that many people have been searching call options and day trading. But then all of a sudden, a massive spike recently. And look, we did see it around that GFC and just after the recovery, we saw a spike. But it's never been this extreme. So there are a huge amount of young investors coming into the stock market who expect multi-digit gains every single week, and everyone has now become a professional day trader from what I'm seeing. Stocks like Hertz really show me this. I've been mentioning Hertz. I mention Hertz because it's a company that filed for bankruptcy that went from 40 cents to $7. It's unbelievable to me, and it's obviously unbelievable to the New York Stock Exchange because they have given a delisting notice to Hertz. And they've basically said here that the New York Stock Exchange has determined that Hertz shares are no longer suitable for listing on the exchange after the company filed for bankruptcy after the May 22nd closing bell. So obviously nobody is happy with what's happening here in terms of the speculation. They see it for what it is, which is pretty much pure gambling, trying to steal money off another person. And it's unfortunate that retail traders are obviously getting caught up in this type of stuff. Someone, remember, was buying Hertz at that $6 plus valuation. I mean, it's pretty crazy to me, but someone was not doing their homework, and you should always understand what you're doing before you place any position, ideally. To emphasize my point, I'm going to use this Barstool Sports guy. He's probably just talking about everything because he wants to get eyes on his product or whatever he's doing. But effectively, he now believes he is a better investor than Warren Buffett and has determined day trading is the easiest game there is. That's a fact. So this guy basically made, $300,000 supposedly by trading a couple of airline stocks and a few other things. Look, $300,000 is a lot of money, but in the real world of investment, it's nothing. So this guy, yeah, you can make some money, $300,000 or whatever, trading airlines. You do that 50 times over and you do that every single week. I don't think it's going to happen for you. We're not always going to see this extreme movement of each thing. And by picking an airline stock, you're actually taking a big risk. And this is the thing that most day traders or most investors never think about. How much risk are you taking? And what is the real risk of that particular asset that you're purchasing compared to the reward? When you buy a high quality company, you can always say, well, I think that's going to come back. But when you buy a company that's kind of diseased in terms of it's not doing very well and it potentially has some very, very bad debt issues, it could all go. You could lose it all. So if you don't understand this stock can go to zero, and that's my worst case scenario, then you aren't really thinking about the true risks. You might say, oh, I'm going to get out of that stock. But what happens when that stock goes down 20% or 30%? Are you going to really sell it, or are you going to hope and pray that it comes back? And that's what most people unfortunately do. So I want to bring up the VIX. The VIX is spiking again. We did a video talking about how the volatility is probably not out of the market yet. We've seen some pretty big moves up since then. And now we're seeing a relatively decent move down. We have 31.6 VIX. Historically, this is still very high in terms of the volatility index compared to over time. These are the previous spikes, and we saw very large kind of sell-offs during this time, especially in this 2018 and 2019 area. So pretty large sell-offs can happen off high VIX, and the VIX is moving up, and of course the stock market is moving down. So we're sitting now at 9,900 on the Nasdaq. In terms of where the pullback could come to, I've got this Fibonacci up here. So the Fibonacci of the whole move from the top to the bottom. We'll draw that right now. And it looks like the 38.2 fib is kind of falling right in that zone around that 9,000. So just below the 9,000, 8,800. I would think that the 9,000 will act as pretty decent dynamic support for the Nasdaq. Is that a relatively large call? Sure, it is relatively large, but this bull run is historic. And usually there's always a decent pullback after you reach a new high. We talked about that. We talked about how the stock market likes to come to a 38.2 fib after that. And while the bull case is very firm in terms of, yes, the economy is terrible. Yes, there's so many problems in the world. At the end of the day, we have unlimited liquidity from the Fed, and the Fed will probably do whatever it takes. Is this going to hurt future generations? I think it will. I think someone's going to have to pay for that. And it's probably going to be me and other people out there that are paying for these governments recklessly printing cash and doing these kind of things to try to support and therefore pass the problem to somebody else in the future, because all they're doing is stop gapping a bigger problem in the end. But you're trading what the price action is telling you. So if the price action continues to come down and we see something like this, which I'll draw on the screen right now. So if we see something where we have lows and that comes down and forms, so we've got a low here, then we make a lower high, and then we make a lower low, that will pretty much lock in the change of trend. We'll be pretty much breaking kind of this last trend line at that point, and we would usually see the pullback that the market probably deserves to do after this epic historic kind of bull run. And at that stage, we would be really seeing further downside action in terms of the lower low would come in, that would change sentiment in the market, and then we would come down. Are we a long-term buyer in the stock market? Yes, we are. That's what we do. We like to buy stocks. We like to buy quality, and we will buy more stocks. That's the whole point. Will it come back down to these lows? It seems unlikely now, just based on everything that's happened. But again, buying the dip, it gives you a better opportunity to get maybe some quality, cheap stock. And you can't just buy every single time it goes up. Usually the market will come down, and there will be still increased volatility for the next 12 to 18 months in the market. What are our thoughts on the S&P 500? Something pretty similar. I've got up here a couple of moving averages. I just want to show all of these to everybody. We'll go on to the 4 hour quickly. The 4 hour is pretty much showing us that the S&P 500 has gotten through the 50 moving average on the 4 hour, and it has started moving lower. In terms of where the market was going to go to, very similar kind of concept than the Nasdaq. We would probably see the market come back down and try to test 3,000 and find some form of buying support there. And then we would maybe see it find the buying support from Wall Street and move back up to test the previous highs. That's the general expectation for what you would see. If the market continues to come down and breaks past this level, obviously the 2,800 will be incredible support. There will be a lot of buying pressure at the 2,800. So like anything, a lot of the time when you're investing in the stock market, you're investing in any asset class, people like dollar cost averaging, where they buy portions over time, and then as they save up money, they buy the portions. I found it to be a pretty good time when there's dips or there's even crashes to buy at certain key levels and have a plan. Remember, having a plan for whatever scenario could happen and sticking and having conviction to that plan is what we're all about on this channel. I don't care if you're a bull or you're a bear or whatever you are, as long as you have a conviction in your plan, you can stick to it. And then by sticking to it, you will do better than most people out there, because you won't be constantly going, I'm going to buy, I'm going to sell, I'm going to buy, I'm going to sell. Having a plan is the concept. If you're going to be a long-term buyer and you believe in stocks at least over the next decades, then you should be looking for quality at certain prices. If you have an idea that the whole stock market's going to crash, then of course you should maybe believe in that. I mean, that's a thing that could definitely happen. Could it go lower? Sure, anything's possible. But again, like on our channel, I like to be a little bit more in the kind of middle of both. I'm a long-term buyer, I'm a long-term bull. I just like to buy it at cheaper prices. And if cheaper prices present, why not get them? So I don't always just buy into the hype. I wait until people have that fear and then at the fear times you want to purchase. So hopefully this helps everybody today. Make sure you subscribe and hit that bell for more content on this channel. Give us a like to help us with the algorithm, and comment down below which stock you're looking at. I would love to create a video for everybody that has a few different stocks that people are looking at that could be a good buy opportunity. So make sure you let me know down below. Thanks everybody, and happy trading. Goodbye.